Hey guys, it is Julie here with TipRanks, and today we're taking a look at 3 cheap strong buy stocks. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Now, a comment I get on many of my videos when looking at certain stocks is that the stock prices are a bit too expensive for some. And of course, fractional shares do exist, but many of you guys are just looking for some cheaper alternatives and to maybe get in on the ground level before any explosive growth happens. So that is what we're focusing on today. We'll take a look at a few companies all priced under $10 per share and with a strong buy consensus from some top-ranked analysts. We found today's stocks using the Top Analyst Stock Tool under Ideas. This will show you stocks with a strong buy or sell rating consensus according to top-ranked analysts. We can see some of the top sectors here with the most buy ratings. And when we looked at strong buy ratings in those categories, I sorted by price to find some that are under $10. Please keep in mind that some of these cheaper stocks can have more volatility associated with them compared to some big stable companies. So always keep your own risk tolerance and investment objectives in mind. Now, getting into these 3 cheap strong buy stocks, we're starting off with Custom Truck One Stop. Their stock trades under the ticker CTOS, currently priced at $6.88 per share. They've seen year-to-date growth of 8.5% and over the last 3 months are up 4.7%. Custom Truck is the largest single-source provider of commercial trucks and equipment. The company is committed to providing a truly comprehensive outlook for all truck-related needs. They offer a genuine cradle-to-grave solution, including the sale, rental, customization, remanufacturing, service, and disposal of commercial trucks and heavy equipment. Their range of services is designed to support companies in industries as diverse as construction, forestry, telecommunications, and propane. The company has been in business for over 30 years with over 2,300 employees and $1.5 billion in annual revenue. Their next earnings report is coming up on August 7th, and in the previous quarter, which came out near the start of May, they did have a solid earnings beat. For their first quarter, the company reported earnings of 6 cents per share, which was double the anticipated 3 cents per share. On the revenue side of things, they had $452.2 million and saw growth in their rental revenue and equipment sales of 8.4% and 32.6% respectively compared to the year prior. Following that quarterly report, the company also increased their 2023 fiscal revenue and EBITDA guidance. Currently, the stock has 4 analyst ratings and comes in as a unanimous strong buy. With an average price target of $9.75, that would be an upside potential of nearly 42% from current prices. And the most recent rating came in just today from a 5-star analyst at Citi who gave it a price target of $9 for an upside of 31%. Second on our list today, we have Applied Science Products. Their stock trades under the ticker APLD, currently priced at $7.54. And I'm sure you can see looking at this chart, they hovered around that $2 to $3 price point for a long time before taking a massive jump up in May. And trust me, we're going to get into the reasoning behind that. Applied Science Products, or also known as Applied Digital, designs, develops, and operates next-generation data centers across North America. They are the leading digital infrastructure and colocation provider of US-based next-generation data centers, which are optimized for high-performance computing applications such as AI, machine learning, graphics rendering, Web 3.0, and other HPC workloads. Their business focuses on AI-based cloud service, next-gen HPC data centers, and Bitcoin data centers. With dedicated and experienced leaderships in the fields of power procurement, engineering, and construction, the company collaborates with local utilities to solve the problem of congestion on the power grid while stimulating the development of more renewable energy. Now, that big jump that their stock took back in May had to do with the company announcing how they're furthering their business in artificial intelligence. Applied Digital announced that their recently launched AI cloud service had secured its first major AI customer with an agreement worth up to $180 million over a 2-year period. Their CEO said that the amount of demand they're seeing from emerging applications for these high-power compute solutions is unprecedented and likely just the tip of the iceberg. Following this, they also announced that they're working with Supermicro to help deliver their AI cloud services, along with a second AI customer with an agreement worth up to $460 million over 36 months, plus a strategic collaboration with Hewlett-Packard Enterprise to help deliver those AI cloud services. So really full steam ahead with all of those AI updates. Now, their next earnings report will be coming up fairly soon here on July 24th. And the company is starting to near positive earnings per share. In their last earnings report, they came in with a loss of 1 cent per share, which was 4 cents narrower than analysts had anticipated, and reported revenue of $14 million. Their stock has attracted buy ratings from 6 Wall Street analysts. And that strong buy rating comes with an average price target of over $13 per share, which would be a huge upside potential of nearly 74% from current prices. Taking a look at our list down below, we can see those price targets range from 56% all the way up to 135%. The most recent rating came in just today with a price target of $16. The analyst said that with 2 AI contracts in place, the firm estimates that 35% of their revenue will be from non-blockchain customers by the end of 2024. And our third cheap strong buy stock is Crescent Point Energy. Their stock trades under the ticker CPG, currently priced just above $7 per share. Now overall in the past year, they are up 6%, though they have seen some ups and downs and are currently down nearly 7% over the last few months. The company does also pay a dividend of 30 cents for a current yield of over 4%. Crescent Point Energy is an energy company that engages in the exploration, development, and production of oil and gas properties. They are a leading North American oil producer focused on the development of high-return resource plays. They operate primarily across Alberta, Saskatchewan, and North Dakota. They recently acquired a company called Montney, which helped them acquire oil and liquid-rich assets in Alberta for $1.7 billion in cash. The deal adds over 20 years of premium inventory for the company and is immediately accretive, increasing their excess cash flow per share by about 20%. Their next earnings report is coming up on July 26th. Where analysts will be anticipating earnings per share of 29 cents, which is a decrease from the previous year. In their last quarter, they did come out in line with analysts' expectations and saw revenue of $612 million. Their stock currently has 4 analyst ratings coming in as a strong buy. And those analyst price targets come in just above $11 per share, which would be a growth potential of about 57% from current prices. Now, our most recent rating came in 3 days ago, and it is a buy with an upside of 61%, though the analyst did decrease the price target by 50 cents. All the others are buys as well, ranging from 37% all the way up to 90% upside, and a lot of 5-star analysts weighing in on the stock. So there we have 3 stocks, all priced under $10 per share and with unanimous buy ratings from some pretty highly ranked analysts. Let me know your thoughts on these companies in the comments down below. Which one catches your eye the most, and what do you think of their stock's growth potential? Please keep in mind that these videos are never a suggestion to buy or sell any specific stock, and especially in some of these cheaper stocks, there can be a lot more volatility. So make sure you always do your own research and due diligence before making any investment decision. If you made it to the end of today's video, hit that thumbs up button and make sure to subscribe to the channel as well. Thanks so much for watching. Have a great day, and I'll see you back here next time.